Hi, and welcome to this episode of On the Money. Australia's Small Business and Family Enterprise Ombudsman Office has officially opened and is being headed by Kate Carnell, former Chief Executive of the Australian Chamber of Commerce and Industry. Carnell has stated her first few weeks in the role will focus on listening to what the small business community wants from the Ombudsman. If you're interested in learning more or submitting an idea, simply head to the Australian Small Business and Family Enterprise Ombudsman website, asbfeo.gov.au. Great news for startups. The federal government has outlined the government's plans to remove early-stage regulatory hurdles. Changes have been designed to help startups swiftly grow their concepts and include the introduction of a regulatory sandbox, which will allow fintechs to test their products and systems without having to get the relevant ASIC license if they do so in a controlled environment. Recipient-created tax invoices, or RCTIs, differ from standard tax invoices in that they are issued not by the supplier but by yourself for a good or service you have received. Your supplier can then use this information to ensure their BAS is accurate. Remember that RCTIs are limited to certain goods and services and can only be issued if both you and your supplier are registered for GST and have agreed in writing that you will issue RCTIs. For more information, simply give us a call. The next time you receive an email from your CEO, take a second, closer look. The latest phishing scam, dubbed the CEO email scam, takes the form of an email seemingly sent from the business owner or chief executive officer to a senior staff member and asks that a prompt payment be made to cover a purchase or debt. The use of seemingly the correct email and short, direct language has resulted in the scam costing businesses an excess of $2 billion in the past year. To ensure your business doesn't get caught out, try putting a verbal confirmation rule in place. And if you're ever in doubt, don't risk it. Jump on the phone and confirm the payment with a senior staff member. Don't forget the compliance deadline for SMSF's trustees to ensure your fund meets with requirements for investments in collectibles or personal use assets that were acquired before July 1, 2011 is fast approaching. Under the rules, items including artwork, jewellery, antiques, vehicles, boats, postage stamps, coins and banknotes cannot be leased to or used, stored or displayed by a related party. In addition, decisions about storage must be documented and items must be insured in the fund's name within 7 days of acquisition. Since trustees have had since July 2011 to make these appropriate arrangements, the ATO expects they will have ensured the requirements are met before the deadline. If not, penalties will apply. With business owners enjoying the benefits of record low interest rates, it may be time to consider moving to a fixed rate. Benefits include locking in a rate about the same level as what you're currently paying on a variable rate and reducing your risk of being exposed to lending bank margins. Before deciding to switch, take into account your interest rate risk and the bank's perspective. And as always, before making any major financial decision, shop around, do your research, and seek professional advice. Tax time is fast approaching. Don't forget the company tax rate for small businesses with a total annual turnover of less than $2 million has reduced to 28.5% for income years starting on or after 1 July 2015. When lodging your company tax return, remember to use the new rate of 28.5% for the tax on taxable or net income, and that the franking credit cap remains unchanged at 30%. That positive note wraps up this episode of On the Money. If you'd like further information about these or other accounting issues, we welcome your call or email. See you next time.